everyone. This is Dr. Aakash. I'm the assistant professor in Department of Professional Accounting and Finance, Christu Jayanti University. So today I'm going to discuss some important insights of capital gain. If you are a student of income tax or BCom, so you must have heard about the five heads of income. So basically we have five heads, and income from capital gain is the fourth head of income, which is very much important. So if you just check the section, or if you check the Income Tax Act 1961, then you will find कि section 45 to section 55 discuss about the income from capital gain. Now so many students are confused कि what is the meaning of capital gain. So two things are there which I want to clarify before that one. First is gain, and that is one is profit. You should be very much clear what is gain and what is profit. Profit means when you are selling out something and getting something, that is your profit. But the gain means that you have invested somewhere, and out of that investment you are getting some gain. So when we talk about the capital gain, so if you just go through the literal meaning of capital gain, then you will find that if you are transferring any asset and you are getting out of that particular transfer, that is your income from capital gain. Another thing, what is the basis of charges? How will you call any particular income as an income from capital gain? So section 45 of subsection 1 describe about the charges of basis of charges. So four important basis of charges are there as per section 45 of subsection 1. The very first thing is there must be a capital asset. If you are calculating the income from capital gain, then you should be very much clear कि four basis, first basis, there should be a capital asset. If capital asset is not there and some other asset you are transferring, then it means it's not your capital gain. So there must be a capital asset. Second condition, as per this particular section, there should be a transfer of capital asset. Suppose you are having some capital asset but you have not transferred that asset, so how can you calculate the capital gain? So second important thing is there must be a transfer of capital asset. Number 3, some profit or gain must arrive out of that transfer, or there must have been some gain or profit out of that transfer. Third important condition. Then fourth important condition is that particular capital asset should not be exempted under section 54, 54B, 54F, 54EC, 54ED, 54F and 54GE. So these are the important deductions. So if any asset is just coming in these categories, then you should not take as the income from capital gain. So these four bases of charges are there. After that, if you are clear with this particular thing, then we can just move to the next thing, that is meaning of capital asset. If you are thorough with the Income Tax Act 1961, so you must have heard about the section 2 of IT Act 1961. So in section 2, as per the section 2, all the meanings are there, whatever the important terms are there in Income Tax Act 1961. For example, assessee, assessment year, previous year, income is there. So same, if you just go through section 2 of subsection 14 of IT Act 1961, students, then you will get to know the meaning of capital asset. Here two important things are there. First thing is कि if any asset is held by the assessee, whether is used for business or not. First condition. Second important thing, if any any share held by the FII, foreign institutional investors. So two important things are there, but few exceptions of this rule is there. First exception is कि asset for personal use or household purpose. First is asset for household purpose, and second one is asset for personal effect. What is personal effect? Personal effect means whatever the clothes we are wearing, whatever the personal things we are using, that is personal effect. But again, if you just go deep inside this particular meaning, then second clause, that is personal apparel, one again one clause is there. It means that some exceptions are there. What are these exceptions? What does not include the personal apparel? So first one is jewelry. Jewelry will be calculated or will be treated as the capital asset. Then drawings. paintings, if any archaeological collection is there, so these are not considered as the personal apparel. Now, so what happens, students? Again, after that, some exceptions may be there for that one. For example, agriculture land in India situated in rural area. So again, students, whenever we talk about the laws, so law contains some, statutes with all the, meaning. So when you will call a particular land as a agricultural land, so agricultural land should be situated in rural area. But what is rural area? Some conditions are there. We just determine this particular condition with the population of that particular area. Then gold bonds are there, 6.5% gold bonds are there, 7% gold bonds or national defense gold bonds are there. But that gold bond should be issued by the central government. Then special bearer bonds are there. Then gold deposit bonds are there as per the gold deposit scheme 1999. After that, another important topic I can discuss with you, that is long term and short term capital gain. Again, students, some conditions, some clauses are there. Okay, when will you call a personal particular gain as a long term capital gain or short term capital gain? So if you are just getting any gain after transferring the long term capital asset, then it will be counted as the long term capital gain. Then if you are transferring any short term asset and you are getting something out of the transfer of that one, then it will be your short term capital gain. Again, some conditions are there. So whenever capital assets are there, then you can classify that particular capital asset in two parts: short term capital asset and long term capital asset, what I have discussed with you. Then in long term capital asset, generally shares or securities, or if any mutual funds are there, and any other capital assets may be there. So again, some condition is there. If I just classify this particular condition, number one, shares and securities. Shares and securities, if these are listed shares and securities are there, then the duration is 12 months. If these are unlisted securities, then duration will be 24 months. But if any other asset is there, then it will be your 36 months. So 12 months for the listed securities, 36 months for the unlisted security, and 36 months for the other security. After that, students, what include a transfer? Sometimes students are confused. So I want to just make it clear to you, students, ki, when even in the meaning itself, I told you ki if any profit or gain is arising due to the transfer or sale of any asset, then that is your capital gain. But what include transfer? So transfer may contain certain terms, that is sale. Sale means you are getting money and you are giving your property to someone, that is your sale. Exchange. Exchange means कि you have taken some other house property and you have given some your property. You have exchanged that one. Even after the exchange, if you are getting some gain, that is your capital gain. So exchange also includes the capital gain, or due to exchange also capital gain may arise. Relinquishment. Relinquishment means कि I am just leaving my right of any property. For example, I have some property, I have suppose 4 brothers. Now I am telling कि I will not take this particular property, let my brothers take this particular property. That is relinquishment. Extinguishment, if someone is removing to you from that particular property. For example, best example for this one is forfeiture of shares. When companies are just forfeiting your shares, it means now you don't have right on that particular shares. Compulsory acquisition. Certain sections are there in income tax where we are just discussing about the compulsory acquisition. Compulsory acquisition means कि sometime government is planning some, that highway or some railway track or some metro line, and government is just taking your property and giving you some compensation. So that is compulsory acquisition. Suppose your agricultural land is there in between some highway or in between some railway track, and you are getting some amount from the government on behalf of your property, that is compulsory acquisition. Now conversion of capital asset into stock in trade. if you are converting, generally, students, what happen, whatever the stock is there, we don't consider stock as a capital asset. But if you are converting that particular stock in the capital and you are selling that one, then it will be your capital gain. So these are the few examples of this one. But again, what not included in transfer? Transfer, so I just told you, sale is there, exchange is there, relinquishment is there, extinguishment is there, compulsory acquisition is there, conversion of stock in trade is there. But after that, few items are there which will not be included in the transfer, like distribution of asset to its shareholder on the liquidation. We are very much aware with the liquidation, when company is dissolved. Now company is dissolved, now partners or whoever the shareholders are there, they are just taking their assets back, or they are distributing the asset. That will not cover under the definition or category of capital asset as per section 46 of subsection 1. Then distribution of capital asset in HUF to its member at the time of total or partial partition. Hindu undivided family is there. So if Hindu undivided family is just, that splitting, now family members are asking their personal assets and all, that is also not in the category of capital asset. Then transfer of capital asset under a will or irrevocable trust or a gift. Suppose you are just transferring your capital asset as a gift. Again, certain conditions are there, I'll let you know about that one. Then transfer in capital, transfer in case of amalgamation. Amalgamation is there. Transfer in case of demerger is there. So transfer of agricultural land in India effect before March 1st, 1970 is there. And again, so many that sections are there, but few important things I discussed with you. So after, again, long term and short term capital gain is one of the most important point which I have discussed with you, and you can just go through that one as well. And after that, calculation of short term capital gain and long term capital gain is there. Formats are almost similar, but you should remember, whenever we are calculating the short term capital gain, we don't use the index cost. While calculating the long term capital gain, usually or generally we use the index cost. Index cost, that meaning and more clarification I'll try to give you in the next class. So up to here, whatever I have discussed with you, please go through that one. And in next video, again, I'll bring some more interesting topics related with the income tax or other heads of income. Thank you.